Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. We have just released our monthly India market outlook titled Is Value Emerging? In today's podcast, we will summarize our key asset class views. Now before we get started, a quick roundup of the past month. Indian risk assets have outperformed their major peers given strong third quarter corporate earnings delivery, a resumption of foreign investor equity inflows, and a recovery in large domestic conglomerate. Over the past month, the Nifty index is down 0.7%, outperforming the MSCI World Index, which was down 4.6%, and the MSCI Asia ex Japan, which was down 5.4%. The INR appreciated 0.8% against the USD, while the benchmark 10-year Indian government bond yields rose by 13 basis points to 7.44%. Overall, we maintain a balanced asset class outlook as volatility is expected to remain high in the near term as markets' expectations of central bank peak policy rate resets higher. Nevertheless, value is emerging with India's underperformance over the last few months and strong earnings delivery turning Indian equities valuations more reasonable both on absolute and relative to peers. Now moving on to individual asset classes. On equities, we have a neutral stance as stretched valuations relative to bonds and cash is counterbalanced by robust domestic growth and resilient earnings growth expectations. Within equities, we raise mid and small cap equities to neutral and maintain our overweight on large cap equities given relatively better macro fundamentals and a greater margin of safety in terms of earnings and valuations compared to mid-cap and small-cap equities. On sectors, we are overweight domestic-focused sectors given a weak global macroeconomic backdrop and greater earnings resilience, and accordingly retain our overweight on financials, industrials, and consumer staples. Coming to bonds, we maintain a neutral stance as attractive absolute and real yields are counterbalanced by lower yield premiums, challenging medium-term fiscal position and weak government bond and demand-supply balance. In our assessment, bonds offer an attractive income opportunity as the recent rise in bond yields has improved the available carry, with markets likely pricing in the bulk of their incremental rate hike expectations. Rising interest rates remain a key headwind for bonds. Thus, within bonds, we are overweight short maturity bonds given their lower sensitivity to rising interest rates. Cash remains a neutral holding, and finally, gold remains a core holding and a portfolio hedge against elevated inflation and equity market volatility. That's it in today's podcast. Do reach out to your relationship manager for a copy of our India Market Outlook. Thank you for listening, and if you've enjoyed the podcast, please like and subscribe.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.